This week's market is giving Braveheart vibes. How long will it hold? I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, February 16th. We know that selling or buying a home can be very stressful and confusing. We do these weekly videos so that you can know how the market is affecting you as a homeowner thinking about selling, or someone who is looking for a house that you would love to call home. Let's start off by looking at how the market performed this week. 5 homes are now active on the market, which is down significantly from the 18 we had last week. The average asking price of those homes is $2,086,000, which is significantly higher than the average asking price last week of $1,696,000. 11 homes went pending, which is why the active inventory is so low, which is significantly more than the 3 we had last week. The average asking price of those pending homes was $1,658,000, and last week the average asking price of pending sales was $1,938,000. Finally, the sold homes, there were 3 that sold this week with an average of $1,765,000, up from last week's total number of sold homes, but with lower average price from last week's $1,837,000. So now that we have looked at how the market performed this week, we can take a look at the broader trends that help us give better insights into the overall health and potential future direction of the market. But before we proceed, if you find this information helpful, you can subscribe so you don't miss out on future updates. And why not share it with a friend? Everyone deserves to be in the know about their local real estate market. Okay, let's take a look at those broader market indicators, shall we? The already low inventory collapsed this week as 11 homes went pending. Other than at the end of last year, we are at the lowest inventory levels that we have seen since the end of 2021. This could be a momentary downturn in inventory, but with the lack of coming soon listings, I would be surprised to see the inventory levels climb significantly anytime soon. Since we had a large number of pending sales this week and no increase in inventory, our turnover rate skyrocketed. We are now at 5 times the normal turnover rate. This could be just a 1-week artifact in the trend line because of the drastically low sales volume, but even before this week we saw the turnover rate was already trending towards a higher number. The low inventory will continue to incite bidding wars on well-appointed listings. Those bidding wars are evidenced by the continued increase in the over-under number. Closing sales are now averaging 83,000 over asking, and this number is about 30 days old. But you can see here that over-under number has been climbing for about 30 days as well. The numbers being 30 days old when our turnover rate was floating around the normal range. I expect this number to only increase for the next several weeks as more and more current pending sales are reporting multiple offers. Another indicator that continues its upward trend this week is the average sales price. I know that little artifact down there shows it dipping down a little bit, but the trend is still on the upward trajectory. Just like the over-under number, this trend line shows that the market was what the market was doing 30 days ago. And even then, our prices were trending upwards. With all the current activity in the pending sales and turnover numbers, I would expect to see an even more dramatic increase in the average sales price by the end of next month. The Q fund didn't have any significant movement this week. The fund is holding at about its 13% growth over the past 3 months and more than 40% growth over the past year. A strong Silicon Valley means a robust buyer pool for our San Ramon real estate. And now, if you'll allow me to be a broken record, the only negative news continues to be the interest rates. They bounced back up 13 basis points this week to 6.77%. While higher interest rates counterintuitively usually benefit buyers by holding home values down, The reality of the current market is that the low inventory and high standards of living in the interest rates are only moderately slowing home prices. The thing that stands out to me this week is the impressive growth of the market despite the things holding it back. It reminds me of that scene in Braveheart during the first big battle. William Wallace yelling, "Hold!" It has that same tension. When is it going to break? And now this analogy falls apart a little bit because in the movie, when the hold releases, there's a lot of death. But my point is that the market has that same tension. When is it going to go off? As soon as the interest rates drop, I think we are in for a very hot seller's market, which is really unfortunate for any buyers who think they can wait for the rates to come down. So maybe the analogy doesn't really fall apart. If you're a buyer waiting for that hold to release, you might find yourself impaled on skyrocketing home values. If you can find a house in this low inventory, which I know is difficult, I wouldn't wait for rates to drop. I would buy now before prices go absolutely crazy. Thank you for joining me for this weekly update. I hope this information helped you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the bell so that you stay informed on how the market is shaping up this year. And if you have any questions about how you can navigate this stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend, long holiday weekend, and we'll see you next week with a new update.